Right, ladies and gentlemen, well, I'd like to basically get going. I think we've got everyone online. I don't like to start late for those of you that have arrived. So I hope you all enjoyed starting off with a bit of a spinning earth of Google Earth. I am going to go into that in a little bit more detail just now, and I'll show you some fantastic technologies that we've got with regards to that. Let's move right on now, and I'll basically wanted to bring myself up. I wanted to say thank you very much for attending this evening. I do want to apologize for those of you that tried to come on last Wednesday. Unfortunately, I had what would call a technology problem that I couldn't beat, which was that the whole of Bryanston broadband went down. Anyway, I was here, and so was Richard, unfortunately, at 3 in the morning. But we're back tonight to go through everything. We've got some great facts and figures. We really want to answer the question of what's happening in the Australian market at the moment, where the opportunities are, and, really from your perspective, bringing Richard on board. He's basically the man on the ground in Australia, and he's going to give us some detailed information as to what's happening. So without further ado, let's go on to the PowerPoint presentation and get started. So the question, Australia, why one should be looking at it now. I think before I get started, I just wanted to show you this quick screen. For those of you that haven't used a webinar before, basically this provides you with the opportunity. You've obviously got the screen in front of you. You can see whatever I've got on my screen. And then also on the right hand side, you've got a little audio panel where you can effectively put up your hands, and you can also ask questions. I see that someone here has actually asked in terms of questions. Kanya, you have asked a question, and I'm going to answer that question for you in just a couple of minutes, basically, in terms of what people are looking at and where they're moving to. So without further ado, let's get started. I do have a little poll, and I would like to get everyone involved, start getting people active. So basically, let's look. Why are you looking to invest? Why are you thinking of Australia? Let's launch that poll, and let's see what everyone has to say. And Kanya, this is going to answer your question, certainly, and where people are moving and why. So ladies and gentlemen, all you have to do is you need to go to the poll and click on the one that you basically would like to basically answer. Okay, we've got quite a few people's votes coming through. Let's give it another couple of seconds, and we can just let everyone have a chance to vote. For those of you that aren't paying attention, I can now see which ones aren't paying attention. Hopefully this is supposed to be an interactive session. Hopefully I can bring value to you, and you can bring some value to us. So right, we've got the full vote there now. Let's close that poll, and let's share those results basically. So it's quite interesting. 86% of people are looking at those at property as an investment. 43% are looking at it as a rand hedge, and 43% are looking at immigration benefits. So that's very interesting. The next one that I would like to just run through is, where are you looking? So where are you looking to invest basically? So basically, what's going on here? We've got obviously the major cities. I'm interested as to which areas people are looking to invest in. Okay, so Sydney, basically, let's close up that poll and show everyone what we're looking at. We can see that Sydney is coming through at about 43%, Brisbane about 71%, and Perth 29%. So no one this evening is looking at Melbourne, which is very interesting when one considers what's happening in the market. Okay, that's fantastic. Well, that just gives you some idea of what's actually happening, and I think what's most important is that it also starts to get you into acting and you start learning. Lastly, I want to ask one last question before we get started, and that is, are you interested in a house? Are you interested in an apartment? Or are you interested in land? Okay, very interesting. So let's break it down basically. 57% of people are interested in houses, 71% are interested in apartments, and 14% are interested in land. So you can see the results coming up there. Very interesting in terms of the different areas of the country and also what different people are looking for. So let's basically move on now. If I take you back to the presentation, you can actually see there that I've put through the different reasons that people look to buy overseas, and we've already seen the statistics and what people are looking at. And I think the most important thing this evening and what we're looking at is primarily from an investment point of view, with the slight angle towards the immigration side, and also what's important with regards to immigration and the benefits of investing prior to immigration. That's basically what people are looking for this evening. I've got that picture there, and I do tend to challenge people and say to them, you know, what is it? What is that piece of, what is that picture? And you know, the simple answer is, ladies and gentlemen, that's a nice home-cooked meal. And I think the important thing that I'm trying to show people is that when you've got a nice home-cooked meal, the most important thing that determines the quality of the experience is actually the preparation. And you know, whether you're talking about an investment and setting yourself up for later life, or whether you're talking about immigration, both of them, your preparation will determine how much you enjoy that experience. So let's look at some of the advantages of investing in Australia prior to actually immigrating to Australia. Firstly, whether you know you've got the tax and depreciation advantages. So to explain what I mean by that, if you've got a property in South Africa and it's costing you 10,000 Rand a month, and your rental income is sort of 6,000 Rand a month, that 4,000 Rand a month is actually lost each and every month. However, in Australia, you can actually accumulate that loss. You can also depreciate on the construction. You can depreciate on the fixtures and fittings. You can take into account the acquisition costs, and you can even include an inspection trip once a year to go and view that property. Now, that's very important for you, because on this property, even though it's cash flow positive, you can actually see that it's putting money in your pocket each and every year. For the tax purposes, you're actually accumulating a tax loss of roughly $16,000 a year. Now, that's fantastic. Whether you're an investor, you can accumulate that tax loss, and if you never move to Australia, you can actually offset it against capital gains tax. Or if you were to move to Australia in the next 3 or 4 years, you would actually be able to, you wouldn't earn a cent, you wouldn't have to pay a cent in income tax until you'd actually paid off that accumulated tax loss. The second thing that's important is from an immigration perspective. There's 3 different ways to immigrate into Australia, and I'm not going to go into them in detail, but basically there's a skills-based visa, there's a business-based visa, and there's a buy-your-way-in visa. Now, the fantastic thing is that we work with some great partners, Network Migration, and they can help you immigrate to Australia, and they will understand what it is you're looking for, and then ultimately you can come up with the best way. But property doesn't guarantee you your residency in Australia, but it really does assist. And for example, with a business visa, there's 3 criteria, and one of them is to invest $150,000 into Australia. And as long as you basically have bought property, it actually constitutes as part of that investment. The other thing is credit rating. You know, a lot of people don't underestimate how important credit rating is. To give you an example, I basically moved back from London after living there for 9 years, and I had no problem getting car finance, mobile phone contract, etc., because I had property here in this country where the rent was coming in, and more importantly, I had effectively the mortgage going out. And the great thing with that is that the banks in South Africa saw me as a financial entity. My uncle, on the other hand, moved from Zimbabwe, Harare, to Brisbane. He bought a property for $1.2 million cash, and yet he couldn't get a credit card or a mobile phone contract for over a year because he didn't have a credit rating in Australia. So really one needs to mustn't underestimate how important that is. And then finally, and the last one, and quite a chauvinistic one sometimes I say, but it really is one that the females like to understand, it really is buying an investment property now can really assist you, actually help you set up buying a home later down the line. Even if you're looking to go to Australia in the next 2 years, I highly recommend renting for at least 12 months because you're never going to know exactly what city you want to live in. More importantly, you're never going to know what suburb you want to live in. You're not going to know where your mates want to play golf or where your kids are going to go to school. So if you rent for at least 12 months, even if you're only going over in the next year, that means for at least 24 months you're out the market. So make sure you're investing in a property that's going to get you the best capital growth. It's also going to get you the best returns on investment, the best rental returns. So you're getting the best return on your investment, and that will ultimately help set up the ability to buy a home once you're ready. And when you're ready, get in a car with the best estate agent in the best suburb that you want to invest and go around and look until you find that home. But for you as a non-resident now investing from overseas, you can only get a 70% mortgage. Once you're living in Australia, you can actually get a 90% mortgage. You can release that 20% and you can put it towards your home. So, buying a property now as an investment really helps you set up for later life. From an investment point of view, the things that are important to take into account firstly are the economy, and I'm going to go through that in a little bit more detail. You've got the fundamentals of the property market, and that is very important, and you need to understand it. And then lastly is the immigration factor. I think the important thing that a lot of people underestimate is that over 2 million people apply each and every year to get into Australia. The average for the last 5 years has been 177,000 people a year. There's only basically two ways to get into Australia. You either have the money or you have the skills. This country and their economy continues to get stronger and stronger and stronger. And I certainly think it's one of the most important facets that one needs to take into account when it comes to Australia. With regards to the economy, you can see here's a graph which basically takes into account both the OECD countries and also the developing countries like China, Brazil, India, Russia, Indonesia, and even South Africa. You can see that over the future, it's China that is going to be leading this growth. And, interestingly enough, China recently came out last week with their GDP growth statistics, and it's at 7.9%. It's just below the 8% that they are looking to maintain. China is really leading the way with regards to the global growth. And the impact that that has on Australia is that geographically they are the closest Western country to China, and that their economy is directly impacted by this Chinese growth. The second thing that is very important to take into account is that if you take the top 100 banks in the world, Australia actually has their top 4 banks are within the top 15 banks. You can see them sitting there in the red. The important thing is that also less than 1% of their loans are non-performing. And so their credit rating has not been affected by the subprime crisis. Sure, they've had a problem with regards to raising capital, just like everywhere else in the world. But most importantly, their banking sector is very sound at the moment, and that brings a lot of confidence to the economy. Something that's very interesting to take into account when one compares America, England, and Australia, when one takes the base rate in America, you can see here that there's been a huge drop in base rate in America. There's been not as big, but also a big drop in the UK. And then relatively the Australian is actually smaller. But the important thing is that the drop from the bank base rate has not been passed on to the man in the street in America. And it hasn't been passed on to the man in the street in England. And yet in Australia, it has been passed on to the man in the street. And the most important thing to take into account, that is why the Australians not only shored up their property market in the last 12 months, but have actually seen growth in amongst their property market because people have been able to borrow money. The counteract to that, and South Africa is actually following in the roots of England and America, where because there's very little access to capital, less people are buying property. Because less people are buying property, property prices are going down. Because property prices are going down, the banks are willing to lend less. And it's a downward spiral that continues to go down and down and down. The difference is that with regards to Australia, they shored up that market, they've brought confidence to that market, they've stimulated that market, the first-time homeowners are in the market, the investors are in the market, and because of that, it's the best performing property market in the Western world. So, when one looks at the 100-year average, it's actually at 8.7%. The first 6 months of this year have actually seen 4% growth. So as I said to you, there's been a lot of stimulus, and that has contributed to positive factors within the Australian market. I want to take you quickly to show you the IPS blog, and I think it is important basically with regards to understanding, because there's a tremendous amount of information here. So this is the IPS blog. You can see all our Twitter updates. For those of you who don't understand Twitter, it's fantastic. This is the latest post we put in about 2010, and you've got some stuff here on the UK market. I don't want to bore you with that, but importantly enough, here's that article on property prices going up. They basically said that they've gone up by 3.9% in the first 5 months of 2009, cancelling out the losses which were incurred last year. And this is according to RP Data and Rismark International, the two property economists, the two biggest companies in Australia. Values have climbed in every mainline capital except for Perth. The national median for dwellings sits at 468,000 at the end of May, which is 0.1% shy of the February 2008 peak. In Melbourne is the top performer in terms of house price growth. It's very interesting that we are promoting a lot, particularly of houses and in Melbourne. And also the median has climbed by 5.9% to 467,000. It's then got a breakdown of every single city. You can see there's Sydney, Melbourne, Brisbane, Adelaide, Perth, and Darwin, and what's actually happening in those areas and the type of growth. And then lastly, there's another article here, which is the Australian property market is expecting an upswing, and there's actually a lot of research which is being done, and they've got the property clock, which is becoming quite popular now, and it actually shows where the majority of both investors and homeowners believe the Australian property market is and where it's actually sitting. So that gives you a very good idea. I would highly recommend going along to ipsinvest.blogspot.com. You can see it there, ipsinvest.blogspot.com. Let me actually just send that through to you all, because I find it's a lot easier to be able to just click on it. And basically there's a tremendous amount of information there. The property market continues to grow fastest in the coastal regions. The land component represents 2/3 the value of the home, whereas, you know, in South Africa it's quite interesting. The house and the house in Australia only represents 1/3, whereas in South Africa it's the other way around. The house tends to represent about 2/3 of the land. 64% of people own their own homes now, but that's expected to only be 50% by 2050. Now you can imagine that's going to have a good impact with regards to people who are property investors and looking to actually rent out to the market. And then the FIRB, which is the Foreign Investment Review Board, as a non-resident, that basically determines that you're only allowed to invest in new property. So you can buy land, you can buy apartments, or you can buy houses, but you have to buy new from a developer. You can't get on a plane and go and find an old granny and buy an old house from her. It's basically a law to make sure that they stimulate the economy, because it drives the construction sector and it drives the property market. Okay, now the important thing with regards to Australian property is that it's very different from the US market. In the US, there's been a massive oversupply. They're looking in the region of over 1 million homes. And you can see here from this graph what that supply has actually meant in the American market. And basically, the only way for property to get back in equilibrium with regards to supply and demand in America is for prices to come down. It's a very different story in Australia. When one looks at it, basically the population growth last year was 317,000 people. That's basically the average that they expect over the next 10 years is around 294,000 people. Now, interestingly enough, in terms of dwellings, that basically means that they need to build 182,000 homes a year over the next 10 years. But for the last, statistically, they've only been building about 153,000. So they're 32% short every single year. Now, people say to me, why don't the developers just build more? The reason for it is that they don't have enough skilled labor. They don't have enough skilled artisans. And I think that's very, very important to take into account. And the biggest discrepancies are in New South Wales, which is Sydney, they're in Victoria, which is Melbourne, and they're in Queensland, which is Brisbane. And it's no coincidence that these are three of the major areas which we are actually focusing on to help people invest in. The second thing that's important to take into account is the interest rates. You can see here, this is a graph. Now, I specifically used it. It's from Westpac Bank, and I specifically used it because in the middle of last year, they actually expected interest rates to peak at 7.25% and then to go back to around 5.5%, where they would remain on average through to December 11. Now, the interesting thing is that interest rates actually continued to go up to 8.25%, and then in September 2008, they started to come down, and they're actually now sitting at 3.25%. They've been held for the last 2 committee meetings, but they're actually expected to come down by another 0.75%. Now, there's two very important things to take into account here. Firstly, from December 2001 to September 2008, interest rates actually went up. Now, you know what a huge impact it had in South Africa when interest rates only went up for 2 years. Imagine what it had, here where it went up for 7 years. But more importantly, in the space of 6 months, they dropped their interest rates 64%. And you can imagine what a massive impact that's had on affordability, what it's had to the man in the street, and most importantly, what it's going to have to the Australian property market over the foreseeable future, the next 6 to 12 months. Here you can see some statistical analysis with regards to what is actually expected to happen over the next 3 years. And interestingly enough, you can see that across the main city centers, you can see the medium house price and also the expected growth. So Sydney's looking at about 19%, Melbourne about 19%, Adelaide 19%, Canberra 17%, Brisbane 16%. You can actually see what is expected there over the next 3 years. And that's pretty interesting because those figures tie up both from a year-on-year basis as well as over. But I mean, you're looking at roughly for the whole country about 20%. And these were statistics that came out last month, basically June 2009, from BIS Shrapnel, which is one of the top firms top economist firms in Australia. So in terms of, I've shown you many different reasons, and I say to people, there's fantastic opportunities. The economy is strong. There's good fundamentals within the property market, and I think the important thing is that if one is looking at it as an investment option, there's good opportunity. If one's looking at it as an immigration option, there's good opportunity. So I say to people, based on that, why wouldn't you do it today? Why not? What are the reasons? I don't know if you want to send me through some reasons as in terms of a question or a chat. Let me know. What are the reasons as to why you would not do it today? Okay, well, basically from my perspective, I've been doing this a long time, so I've written down many of the questions I get asked, and why people don't do it. And, one of the first of them is I want to go to Australia and I want to choose the right investment. Now, with you all due respect, ladies and gentlemen, if you had a friend that was flying out from Australia and he was to arrive in Johannesburg Yeah, if you wouldn't mind, Richard, it'd be fantastic. We can send it through to everyone tomorrow. Richard, just a quick one before we move on to opportunities. So something that was very interesting is the statistics came through at about something like 78% of all the people this evening were interested in apartments, and sort of around 50% were interested in houses. Tell me, in your opinion, why is it that you focus on houses and from an investment perspective? Richard, just to let you know, I've worked out how to make you a presenter so they can see whatever's on your screen now. Whatever's on your screen, they can see, basically. Um, I don't know. Anyway, no worries. And listen, the important thing is, and from your side, I mean, obviously in terms of the houses, but I mean, where do you see the opportunities coming? What's happening in the next month or so from your perspective? change myself back to presenter because you hadn't accepted it. And Richard, and what's the and you mentioned, I don't know if you've got any further details. You did mention some other areas, Adelaide, but the one that I was most interested in was you were looking extensively at Sydney at the moment, yeah? Sorry, mate. I'm just pushing you along because we've got about 12 minutes left. So, yeah, I mean, I think the thing that amazed me was when I was with you in March and I flew back from Sydney, was that article that I've got that basically said housing boom. And I mean, that was March 2009, which sort of defied everything that was happening around the world. But it was in those areas you're talking about, particularly that affordable property. Listen, Richard, thanks so much. It's much appreciated. I know it's nearly 4 o'clock in the morning. Ladies and gentlemen, just before Richard signs off, are there any questions that anyone wants to send through to him quickly that we can answer? Because it's, he needs to get back to sleep. Okay, Richard, I don't see any coming through. I don't know if you want to just stay on the line. If any come through, I can ask you just during it. What I'm going to do now is just for everyone, I'm just going to run through the cash flow because I think it's the important thing that a lot of people want to try and understand. If you take effectively this cash flow here, you can see, now this is a generic cash flow, and IPS, for some of you that have seen us before, this is a very standard way that we do it. Up the top, you've got all the variables. Most importantly, I'm only going to run through the very important ones, but effectively you're looking at a 70% loan to value. That rental there is what is actually guaranteed by Oz Invest, so it's fantastic because you actually know exactly what you're getting. You're looking at a yield of 5.11%, a purchase price at 417. I've got the interest rate there at 5.2%. We've actually been getting clients less than that at the moment, coming in around 4.75, 4.8. But anyway, it's better to be conservative. You've got the transfer fees and stamp duty, the legal fees, the finance fees. The nice thing in Australia, there's a lawyer that acts on behalf of the buyer and a separate lawyer that acts on behalf of the seller. So, you know, you're fully protected. And you see there that everything's included right down to the 10-year lease back and even an exchange rate at R6.50. To buy this particular property, you'd need $141,000. And as I said to you, I need to sit with you and I can run through all these numbers and explain exactly how it works. But we don't have any surprises. You'll see there's even a float in there for £6,000 just to make sure that there's plenty of cash. That's not actually being paid to anyone, but it's making sure that there's money in the kitty. Now, importantly as well, this gives you, the next box gives you the cash flow and when you'll need that money. There's different projects, but generally you're looking at sort of 10% within the next 4 weeks, with the remainder due on completion it should be anywhere from sort of 3 months to around 6 months. And that gives you an idea of when you would require the cash and when you would require the rand amount. The most important thing for me as an investor, particularly as a South African investor, this property is cash flow positive from day one. So you take the rental, you minus all the expenses, including things like insurance, etc., and the property is cash flow positive from day one. And then lastly, you basically, I don't have a crystal ball better than anyone else, but if you take a 5-year view and you take 3 scenarios, 6, 9, and 12, the reason I've used that is that the 10-year average has been 12%, the 100-year average has been 9%, and property tends to track inflation, and inflation for the last 10 years has been 6%. At a 6% capital growth over 5 years, you're looking at a 19% return year-on-year investment, which is very good considering what one's getting in the banks at the moment. But the important thing as a South African is that you're actually, the rand for the last 15 years has devalued by roughly 5% year-on-year against the Australian dollar. And so if you're comparing apples with apples and you're taking R1 million, you're basically making a 41% return year-on-year. And that, for me, ladies and gentlemen, is the most important thing as a South African investor as to why you should be investing and taking advantage of the market now, particularly with the strong rand. If I give you some examples of what's available, you'll actually see here, this here is a property which is available in Melbourne. It's one of the more affordable ones. You're looking in the region of 304,000. It's a 194 square meter house on 583 square meters of land. A lot of you asked for Brisbane. This here is a 3-bedroom home. It's in to the north of Brisbane in a place called Kalanga, very near North Lakes. You can see there the price around 380,000, 160 square meters and 320 square meters of land. Now, a lot of you say to me, well, you know, I want to jump on an airplane. I want to actually go to Australia. Ladies and gentlemen, I can save you a tremendous amount of money if you just give me the chance, because what we've basically got is all the technology. Here you've got Google Earth, but let me go down and I can zoom in. Let me go straight into Bridgeway Kalanga. I don't know if you've ever seen this technology, but I think it's the most fascinating technology. Richard, I'm not even sure if you've seen this before. Now basically, you're basically going in. You can click on that area, so that is the exact site that it's actually being built on. I can go in, I can 3D zoom round, and I can actually now see what that suburb looks like. So this is the houses on the other side of the street, and if I go to the left-hand side, you can actually see, I just need to let it zoom in here, but on the other side of the street here is where those properties are actually being built. So hang on, sorry, I've got a little bit lost there. Where am I going quickly? I need to zoom out. Exit, sorry, 2 seconds. Let me just exit photo here. I just need to choose which is the one. Where's the, there we are. Sorry, I used the wrong one. I need to zoom in on that one. So there you can actually see that park. I'm going to show you some information now. But basically, ladies and gentlemen, that's where the houses are being built. That is actually the exact where the site, what's happening, and you can even see what is sitting on the other side of the road, what the houses look like, what your neighbors look like, what the road looks like, and everything. So it gives you a very good idea of what one can expect. And I think the important thing is, I also want to bring up the type of information. If I bring it up here, you can see this is the type of information we'll give you. So that there's a picture of the exact property. Here's your purchase price. That's the expected rental. So that is what they'll actually sign a rental guarantee on, and you'll know exactly what you're getting. And here's the exact plan of what the property looks like. So the master bedroom, en suite with a walk-in wardrobe, your entry, your double garage, your 4 bedrooms, bedroom 2, 3, and 4. You've got your bathroom en suite going through into a laundry. You've got your open plan living area, kitchen, your dining room, and then out onto your al fresco. And the great thing there is it gives you the full breakdown and everything that's included. You really couldn't ask for more as an investor when one's trying to understand what it is that actually is available. The next thing, and a lot of people say to me they want to fly over to Australia. Look at all the information that we, together with AusInvest, put together. There's that same park that's being built. Here is a full suburb report of absolutely everything. The shopping centers, the schools, how far away they are, everything that you want to know, public transport, hospitals. And this is all the important stuff that Richard puts together to make sure that you are investing in the right properties, to make sure that you are effectively taking advantage. The historical growth, the areas, the schools, the demographics, there's basically everything that you need, and there's absolutely no ways that if you went for 3 or 4 weeks you'd be able to accumulate all this in a research. So it's got all the rental appraisals and everything, and I really thought it was important to show you that and to give you a great idea of what is actually provided and the type of information we can give you. Okay, so let me just, just quickly here, there's a couple more questions coming through. Okay, we've got a question for you here, Richard. I'm nearly done. I just want to get to the end and then we'll do question time. Okay, basically this is another property in Brisbane. This is a 4-bedroom house. It's 417,000, 195 square meters, and a 411 square meter piece of land. This here is a house to the south of Brisbane towards the Gold Coast. It's a nice big house, 471, 244 square meters on 612 square meters of land. And this here is a double-story house. And again, it just gives you an example. I've also took a picture here. This is a picture I took with my own camera. It's of the internal finishes. The one thing that you can really get in Australia is great quality finishes, basically. And I think it's very important, with their quality of artisans, the quality of finish that you get is absolutely fantastic, basically. And it's very important for you as a South African to take this into account. And even though you're buying in the affordable sector, which is where the best demand is, you're getting a good quality home. So, in conclusion, I just want to say, before one invests, there are 3 fundamental things that you must know before you invest. And we can actually help you. We can run through all those 3 fundamental items. I highly recommend getting hold of us, sitting down with myself or one of my team, and along with the information we get from Richard and AusInvest, we can take you through it and make sure that you are making the right and correct decisions as to where to invest, when to invest, and what type of property to invest in. So the next steps are, please to fill in the feedback forms. When this particular presentation is done, There will be an online feedback form. Please fill it in. We love to know how we're doing, what we can do better, and how we can improve. In terms of, setting up a meeting, as I said to you, that is the most important thing. We need to sit and understand exactly what it is you're looking for, and we can then help you. And as I said to you, Richard and his team is over in Australia if you would actually like to go over and meet them. We can help you choose the property. We can help you arrange your finance. We can help you manage your exchange control approvals. And then we help you manage the entire purchase process. So dealing with the lawyers, dealing with the FIRB application, dealing with developers, right through to even having proper building inspectors inspect the property before it actually transfers. And then, as I've explained at the beginning of the presentation, we right through to the management. Ozinvest provide you with a lease agreement before you actually buy the property, and therefore you know exactly what your rental is, and you can have peace of mind that you're getting that income and that that property is being managed and maintained. I always use the example of how you can actually do it from remote control. Phil Kelly, the Ozinvest owner, gave me that saying, and he said, remember the 40 soldiers that are sitting in Afghanistan that are currently investing. They go through the same worries that are going through your mind, and yet you're sitting, in South Africa or in London, and a lot easier access to telephones, faxes, contracts, email, and really this whole system has been set up to help people who are international invest. And we really believe that we can give you that comfort that you can make the right investment decisions. So I leave you with this little thought. 90% of people in developing economies get seriously affected when currency fluctuates. Now that's basically based on Russia, Argentina, and Zimbabwe. It's a study that came out 3 months ago. And the only people that weren't affected were those studious investors that had offshore assets and offshore income. And I think that's very, very important to take into account, especially when you take into account RMB Private Bank's latest report, which came out in June 2009, where they said that they were, in the medium term, adjusting their Rand forecasts. They expect the Rand to be 9 Rand to the US dollar by the end of the year and roughly 10 Rand to the US dollar by the end of 2010. At the end of the document, it basically said, if you're looking to invest offshore, now is the time to do it. I'm going to reiterate that. If you're looking to invest offshore, now is the time to do it. So ladies and gentlemen, as we spoke about at the beginning, preparation determines how much you enjoy the experience. Go to the website, ipsinvest.com. All the information is there. A recording of this event will be put up. All the information that Richard gives us, we upload either to the blog or to the website. All the details of the different property opportunities are there. Everything that you need without actually jumping on an airplane is there to help you invest. And, as a little bit of an incentive to go to that website, we're giving away 2 tickets to the World Cup Final 2010 next year. Go along, enter for free, and let your mates know about it. I would highly recommend you actually follow Twitter. If you go to twitter.com/IPSinvest, we keep you up to date as to the latest articles, blogs, everything. And particularly when Richard gives me good information, I can put that up. And then basically you've got our website, ipsinvest.com. So that's all from me. I hope you've enjoyed this evening. I want to thank Richard very much for coming online. I see that he's still sitting there, and hopefully enjoyed the last little bit. I've got a question for you, Richard. For those of the rest of you, if you could please send me through if you do have any more questions. Richard, just to ask you, it says here, do you think Double Bay in Sydney is good for first-time buyers, or is it too expensive? Kanya asked the question. Okay. The next question, also from Kanya, said, which city is most popular with people moving to Australia, since this will drive the rental demand? Certainly statistically, and I don't know if you can challenge me here, Richard, but certainly statistically for the last couple of years has been Brisbane far and away more than anywhere else. But I know that because of affordability, Melbourne has also become very popular in the last 24 months. Perfect. Brian Roberts asked a question. He said, if one does not go to Australia, how does one access the tax loss from South Africa? The important thing there, Brian, is you can get quite sophisticated with regards to setting up structures. But if you were to never go to Australia, you can still offset it against capital gains tax. So you benefit both ways effectively. Mark Lancaster asked, will this webinar be published on the IPS website for future viewing? Yes, it will, Mark, other than the 5 minutes around 7:30 where we had a bit of a problem with the volume. But anyway, the majority of it is up and running. Robin Grant said, thanks, Richard, which I want to reiterate for everyone. As I said, it is 4 o'clock in the morning, so much appreciated. It's great to hear from the horse's mouth what's happening on the ground. Ladies and gentlemen, are there any more questions? I know it is late, we're not supposed to go over 8 o'clock. And as you know, Richard is needs to get back to bed, and you're all going to laugh at me, but I've got my wedding in 9 months, and I've got dancing lessons at Hopper State as well. But no, I think right. I think that's all the questions. So I'm going to call it. Call it quits for the evening. All that information that Richard has spoken about, this presentation will be available. The cash flows. Please get hold of me. You've got my email. There'll be a follow-up email to this event. Once I've actually uploaded it, I'll upload it this evening and send it through to you. I want to reiterate, Richard, thank you very much for your time. I want to thank everyone for coming online. I hope you enjoyed it. Please give us feedback. This is new technology. As you can see, we are struggling a little bit to make it all work, but I think we're getting there. And I think it's certainly going to be the way of the future. And the more information we can provide you with, the more educated decisions you can make, and you can really take advantage of all the research that OzInvest and IPS are doing. So thank you to everyone. Have a fantastic evening, and we look forward to helping you in the future. Okay, cheers, guys. Richard, I'll give you a call on your mobile, yeah? Cheers.